Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Climate change is fundamentally reshaping the real estate market. Where you could confidently invest just 5 years ago, today that same property might pose an unacceptable financial risk. Rising sea levels, more intense hurricanes, and widespread wildfires are turning historically desirable locations into toxic investments. For investors, the goal remains profit and security, but volatility tied to extreme weather events often crushes both. This guide will help you understand the specific properties in flood, hurricane, and fire zones that you must avoid in this video if you want to protect your portfolio and maintain strong cash flow. Coastal and river danger. Flood zones that aren't worth the hassle. Water damage presents some of the biggest financial hurdles for property owners. It is costly to repair, often involves toxic mold remediation, and frequently happens again and again. For investors, this recurring damage destroys profits and makes tenants nervous. We need to look closely at properties facing risks from storm surge, rising seas, and inland river overflow. Check the map. Avoiding Special Flood Hazard Areas, SFHAs. A Special Flood Hazard Area, SFHA, is territory determined by the Federal Emergency Management Agency, FEMA, to have a 1% chance or greater of flooding in any given year. This is often called the 100-year floodplain. If a property falls within an SFHA, it's a major red flag for investors in this video. Even if a property sits just outside the official boundary line, it can still flood badly. Water doesn't respect bureaucratic boundaries. If you buy in an SFHA, lenders will almost always require mandatory flood insurance through the National Flood Insurance Program, NFIP. These premiums are increasingly expensive and unpredictable, particularly as the NFIP updates its risk ratings, Risk Rating 2.0. High, fluctuating insurance costs immediately erode your potential cash flow, making it hard to generate profit comparable to a low-risk investment. Avoid these areas entirely to maintain better financial control. Properties with past water damage, the never-ending repair bill. A property with a history of past flooding, even if it was just once, carries long-term structural baggage. Water infiltration weakens foundations, damages electrical systems, and encourages persistent mold growth. Investors often inherit these hidden issues. The seller might have concealed the damage with a fresh coat of paint and new drywall, but the underlying structure could be compromised. These properties face significant difficulty securing affordable private insurance. Private insurance carriers use sophisticated models. They know which properties have flooded and they often refuse coverage or price it prohibitively high. Furthermore, properties prone to mold require costly professional remediation that significantly cuts into your investment returns. When evaluating a potential purchase, always look for evidence of past flooding. Even small details, such as flood lines in a basement or unusual repairs near the baseboards, can signal severe future financial burdens. Fire danger. Properties too close to flames to be a good deal. Wildfires, especially in the western United States, are no longer isolated incidents. They're seasonal threats that destroy entire communities. As dry seasons lengthen and temperatures rise, investment properties located near forested or scrubland areas face extreme risk. The most immediate threat to your investment isn't the smoke or the damage, but the withdrawal of insurance coverage. Multiple major insurers are already pulling out of high-risk states or drastically limiting policies, making many rural and hillside properties unfinanceable white elephants. That's how climate-related risks can quietly destroy property value over time. Stay tuned for Part 2. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.